The Nigerian bond market has sustained bullish momentum despite sell pressure in the long-dated bonds. Emmanuel Odiaka, CEO of Ecob Capital, joins me for this market discussion. Thank you, Emmanuel, for taking the time out to join us today.
Thank you for having me, Esther.
And the last couple of weeks, we've seen elevated liquidity levels at the markets, boosting market activities and driving yields lower. Just wanted to get your thoughts on how this is changing the dynamics of the market, especially across the yield curve at both the bonds and treasuries market.
Yes, Esther, exactly. Some 2 months back here, market was comfortably trading within the threshold of 15.75 on the long end of the curve, and yes, treasury bills was hovering within 9% and all that. We have seen quite a change afterwards with the inauguration of the new administration and some policy trust, and of course we also know there was some changes at the apex banks, the central bank, and that orchestrated the liquidity threshold you just mentioned while introducing me. So we have seen the central bank remove the cap on term deposit placements or overnight placements at the interbank, and that really changed a lot. And let's not forget that the president did mute in his inaugural speech that interest rates were too high, and market takes very, very costly look at such statements. And these are, in part, the situation and the reactions we are seeing in the market. So yields have moved over 100 basis points after the inauguration of the new present administration, lower, and the long end of the curve today is trading within 14.45 to 14.5% on the 53s, the 50s, and the 49s. Well, going forward, it's an interesting debate because it looks like we are still facing inflationary pressures, and we are trading lower than where the present inflation is at the moment, at real negative yields when you are looking at the 1-year treasury bills. It's an interesting factors going forward, but I think dealers should be very cautious at this level, especially at the short end of the curve.
Yeah, you're absolutely right. I mean, despite the changes in the market and the liquidity levels, I mean, investors are still taking home. It's still a real negative return for investors. I'd like you to just quickly talk also about the Naira, that we've also seen major changes there at the INE window. And obviously, the rate that we see at the close of every trading day differs. Today, I believe the Naira closed again 4.4%, closing at 744 to the greenback at the INE window. Talk to us about liquidity levels at this market. There's been talk about, of course, the CBN perhaps at sometimes intervening just to create some kind of a balance at the market, but ultimately it's left to the willing buyer, willing seller arrangement.
Yes, at the INE window, for us at Ecob Capital, we are very supportive of the fact that we've seen a near liberalization of the foreign exchange market, and we have also seen the black market or the parallel market and the official window, which technically is the INE window now, come to a congruence. Yes, is that good for the market? Yes, market needs to have, we need to trade on one FX rate as against the multiple FX rates we have seen in the previous administration and within the threshold of the last CBN governor. Going forward, Esther, we also do need liquidity in the system. This market thrives on liquidity, on availability of the greenback to trade. We are of the view at Ecob Capital that at this moment, with markets touching a near distance 800 to the US dollar, that the Naira is undervalued at this point, but the market still needs liquidity injection. How the Apex Bank will go about managing this is still a little bit tricky because it looks like the administration wants lower interest rates while we are hovering on higher inflationary pressures. I think at some point something has to give away. We cannot pursue low interest rate at the same time face pressures on foreign exchange, we are of the view at some point there has to be some normalization of interest rates to encourage foreign portfolio investors at the point. But it doesn't look like the present administration or the advisor to the president is looking at that direction. So it's a flight for safety for banks. People will continue to look at the balance, between inflationary pressures and ongoing pressures on the foreign exchange rate to gauge where they want to be. At this moment, market still lacks a little bit of liquidity. The Apex Bank, there's a lot of backlog to be filled, and at some point, they need to sell within 500 plus to 1 billion to the market in USD terms for us to have some reprieve. Let's not forget that every other importer is now going to the iron-in window to show up USD, and that's part of the pressure we are seeing. Before now, we had thought that with the Dangote refinery, coming upstream, that at least 40% of our domestic import needs in crude oil, in domestic import needs in processed energy needs would be taken away. Unfortunately, we are still importing finished product. So that's a big of an issue right now.
Right. We have just 60 seconds left. I wanted to just get your thoughts on Nigeria's Eurobonds, how they're trading at the moment, and the perception of course, of foreign investors. When the central bank governor, the former central bank governor, was suspended, we did see a rally in the bonds, but we have an acting central bank governor. Now, just to get your thoughts on how foreign investors perceive the market and what the expectations are.
Well, it seems market is like an open space. Market is like a child. The truths are very, very obvious. Markets obviously did see the removal of the last CBN governor as a positive sentiment, and we saw those rallies across the market, from equities to Eurobonds to fixed income, and that has continued to be sustained as it were. We think that the policy direction that the new administration has ushered in are positive to market, but it's still a long way to go because we need to deal with inflationary pressures.
All right. Thank you, Emmanuel, for talking to us today. Pleasure having you on the show. Well, that was Emmanuel Odiaka, CEO of Ecob Capital.